Daniel, David Cameron subsequently resigning, as many people thought he would, had the result gone this way. The next person in charge has a tough 2 years ahead in terms of trade agreements and negotiations. What, in your opinion, can still be salvaged from this?
Well, just from a political point of view, it is extremely difficult because the new post-David Cameron administration in the British Conservative Party would have to be made up of individuals who are, broadly speaking, in support of the Brexit, in support of the vote. The British Conservative Party has been split down the middle on this particular issue. So those who are now entrusted with having to negotiate the UK out of the EU themselves are going to have to understand and be in favor of the Brexit rather than want to cling on to any old habits that they might have personally liked. So this creates such a difficult milieu in which those who are negotiating the exit out of the EU have to operate. Ultimately, what Britain wants is reasonably favorable trading conditions on the export of her goods and services into the UK. In other words, preferable tariff and trade regimes, which will allow British products to be sold at competitive prices, and at the same time to be able to import goods and services in from Europe, again, with the lowest possible tariffs. That's the ultimate. Because if you don't have that, you have a disincentive for Europeans to buy UK-made products, and the same would apply for European-made products coming into the UK. And if there was a disincentive to buy or purchasing costs became too expensive, you of course have a reduction in demand for goods and services across Europe, and Europe barely can afford any such decline in economic activity given its very low and rather lackluster GDP figures. So that's why the fear about leaving the EU was always a fear about the reduction in trade, the reduction in demand. And across the world, we see demand for goods and services lackluster and poor. So trying to achieve a balance between these various push and pull factors is going to be the real test for those negotiators in the next few years.
Daniel, this Brexit result, of course, has also had knock-on effects on the rand. Can you explain to us in layman's terms why and what exactly is happening with the rand?
Look, I think it's all about stability and confidence. And as soon as you inject a degree of volatility and the unknown into global financial markets, you get a position where currencies that are generally vulnerable or skittish or highly traded currencies, and our rand falls into all of those categories, those are the ones that feel the effects of this general volatility. There's a belief, of course, that as the UK's economy might be threatened to some degree, and even as Europe's economy might be the same, there could be a flight in terms of investor interest to safer havens, to dollar-based bonds and other such investment vehicles. This, of course, affects investment coming into emerging markets, and as a result, we've seen the rand take a knock, and we've seen other emerging markets currencies, the Indian rupee, for example, as well this morning, also take a substantial hit because the trading relationships also between India and the UK, between the UK and South Africa, are substantial. And if the economies of the source country, let us say the UK, are affected, this will impact upon the currencies. But look, it's all sentiment driven. Dealing with markets, and markets like stability, markets like positive sentiment. And this couldn't be worse for the markets. It creates such an unknown about what it means for a major economy like the UK to extricate itself from all of those agreements within the EU. This, of course, is not going to help stability on the markets. And much of what I think we've seen in the last 12 hours or so has been precisely as a result of this instability, and it's been a negative sentiment driver of markets. I expect it to stabilize over the course of the next few days, but it's going to stabilize, I believe, at lower levels. In other words, a weaker rand and, of course, a substantially weaker pound as well.